Good afternoon and welcome back to another bar by bar analysis here on my channel. Today is May 3rd, 2022, and today we're looking at a 2000 tick chart for the E-mini S&P 500 futures market. The only indicators that I like to use are the 21 EMA here in blue, 200 EMA here in magenta, and a volume indicator which I use every now and then to understand better context of the market. Primarily we focus on using price action and context of the market in order to place our trades. I want today's video to be an informative video talking about this trap strategy that I've been working with. As I continue to practice the strategy, I'm slowly developing rules for myself. I'm trying to find times when I should be trading it, when I shouldn't be trading it. And so as I get used to this, please be flexible with me and don't hesitate to leave some comments below on where this strategy has been helping you the best. Again, the focus is to be profitable. We want to try and be consistently profitable, retain our profits, and minimize our losses. That's really the goal. But anyway, let's get right into this video here. We'll talk through some trades and call it a day. I don't want this video to be too long. As we do on this channel, start with marking overnight highs, overnight lows with the resistance and support level. We had prices that were working from the highs down to the lows. And a short-term trend working up here with a break, potentially looking for a new high back to the top of this range. We have this channel working down off this break. Prices push strongly above EMA, looking to make that new high. Second entry short indicator is showing here, but you're not looking to pick tops, so I'm not looking to trade that. Then we had prices push strongly below EMA, making a new low, so this downtrend has played out. New high first entry long, second entry long, not looking to pick a bottom here. Now we're going to talk through a few of these types of trades today, but in regards to the failure strategy, we have a new low first entry short, second entry short. If prices work down here and then reverse and come back up, I'm hesitant about entering long on positions like this because there's not enough room to the EMA. We have to have some sort of space. We have to be able to trade in the general direction that prices are moving. So if prices are moving down, we want to look for reasons to go short. Again, we'll talk about that as the day goes on, but you're not looking to trade a failure here. Prices consolidating below EMA before a failed breakout, and then prices push below new high first entry long, second entry long. That triggers. This would be an opportunity I'd look for to sell as prices are strongly pushing below EMA. So if prices come back down and stop people trying to pick this bottom, I'm going to ride that momentum down. Now, unfortunately, we don't get that as prices push back up, but it's all good. With the strategy, we stay out of the trade, no harm, no foul. Now, as prices continue up a little bit, we have a new low down here, first entry short, second entry short that fails, but you're not looking to take a failure here because 21 EMAs flat, 200 EMAs flat, overlapping bars. You're going to get killed if you try trading in areas like this. So just continue to let prices play out a bit. As prices continue chopping along just a little bit, we have a new high, first entry long, second entry long, terrible signal bar. Don't go long above these types of bars, but we do have prices kind of potentially trailing upwards here. Trending upwards, I should say. It's kind of hard to find a channel at play. Some people may view this as more of a trading range. I'd probably get behind a trading range a little bit more, but we'll have to just see what prices continue to do. All right, we get a strong bullish bar that pushes up and out of this trading range. And as prices continue, let's see, we have a new low first entry short, second entry short as prices come back down to the EMA and the resistance level of this range. Higher low opportunity. I also see potentially this trend moving up as well. This could be an opportunity you take a chance on, a higher low opportunity. If we back up just a little bit, we have this new high first entry long, second entry long, but terrible spot to go in on. You're looking for a higher low opportunity. We don't get that with the strong bullish bar, but then when prices come back down, you get another higher low opportunity. You could potentially take a trade here as prices work up. I think it's very important we have to ask ourselves, what is the overall structure? Obviously, it's a trading range, but the trading range isn't all the way up here and down here. These are just overnight highs and overnight lows. With the price action that we've gotten as the day started, we have to try and find where this tighter trading range is at, where the prices are at. If I change the color here a little bit, maybe you can see prices are working in this general area. So prices are coming down. We have a break, new high all the way up here. Prices come all the way down. First entry long, second entry long triggers. You could potentially look at trading a failure Where are people putting their stops? Technically, it would go one tick below this signal bar here, but most likely people are just going to extend their stop losses to below this swing here. So if you try going short here, you would potentially be going short into this level of support. It could be a little bit risky. You might take it depending, let's see, depending on where you enter, 6 down to 3.75. So that's 11 ticks right there if you were to put your entry below this bar. If you put your entry one tick below this swing here, I think prices only move 3 ticks before reversing and stopping you out. So I didn't take this trade specifically, but depending on how you enter that either would have worked in your favor or not. But as we continue to refine the rules of this strategy and we figure out what works and what doesn't, that's just going to happen naturally. We do have this new low with a first entry short, second entry short if there's a trigger below this bar. Also new high, first entry long, second entry long. Depending on how this bar forms, if it pushes down first, it's going to trap people trying to go short. And then when this bar finishes, you could potentially enter long here. I think it's a little bit risky, but you do have room to the highs. Bars aren't overlapping as much in this area, so you could potentially take a trade. You'd be in this trade and prices push up for a scalp, but I didn't trade that either. I'm just showing exactly what I'm seeing. Now we have new high, first entry long, second entry long above this signal bar, but I don't really like taking along with a signal bar like this. We also have a new low with a first entry short, second entry short if we trigger below this signal bar, but I'm not trying to pick a top here. I think the level of resistance that we have up here is very loosely defined. I saw a few things happening in this area. I saw a lot of stems forming that were pushing below the EMA, but all the closes were above the EMA. So I thought we could have some bullish movement up here. And so this was the first trade that I took for the day. I wanted to see prices push down first to get people sucked into that trade. And then I put my stop order one tick above this bar here. And as the next bar forms, prices tick down one and reverse. You get the scalp as prices push up, but no runner, unfortunately, as prices chop a little bit and then come back down. But yeah, you wait for people to go short and then you catch their mistakes. Enter one tick above this signal bar here, so you'd be entering at 3, and then you would potentially be out at 4.25. That's 5 ticks right there. And depending on your stop loss strategy, you would continue up for more points. Prices pushing to the top, trying to test these overnight highs before pushing back down. We have this short-term trend that's working. Now that we're breaking outside of this trading range, I'm not sure if we're going to extend it just yet. I want to kind of see how prices are going to play out first. We had the new high all the way up here, and then prices are coming down with a first entry long above this bar, prices coming down, second entry long if there's a trigger above this bar, and there is. And again, with this strategy, people are trying to pick bottoms and we want to help them out of their trades. So the people that entered long here, where are they putting their stops? One tick below this signal bar. This is my second trade of the day. As prices reversed, it got me in and out of that trade very quickly. Again, just trading people's mistakes. We also had this short-term trend in place, so people are trying to go long right into that, and it is what it is though. So we have a break of the short-term trend, potentially looking for a new low. We have this new low, first entry short, second entry short. It's an okay signal bar, but what I've been finding lately is just trying to enter second entry shorts really have been kind of hard to find. There's never a trigger there. Prices continue upwards. It kind of looks like trading range could be extended just a little bit. Some people may argue the support level could be brought up just a little bit, maybe to incorporate more of the more current price action, but it's kind of hard to say. Prices are pushing strongly upwards, potentially testing these highs again. Let's see what we got. We have maybe a potential small channel with a break move to a new high. It's very hard to tell. And as prices continue to push, we don't get the second entry short. Now, when we do get the second entry short, we have to be very cautious about trying to go long with this overshoot out of the trading range. So while we could potentially have a break looking for a new high, I was a little bit weary about trying to go long, catching stops this high. Didn't have to worry about it though, as prices came back down. We have this new high with a first entry long, second entry long opportunity. For those that decided to take that second entry long, you would have gotten the scalp. But this is also one of those areas you don't want to be trading the failure strategy. You don't want to put your stop one tick below the signal bar here trying to catch stops. The reason why is because you had such a strong move up. So we shouldn't be trying to short here. We need to try and find reasons to go long. So if you're not going to enter the second entry long, don't try and trade a failure, especially because this EMA is working up. Prices could easily come back down to the EMA and hold, and they literally do that. As bars continue to print, you see exactly what happens. If you try entering one tick below, trying to catch stops, guess what? You're in that trade, you caught the stops, but now you're trapped because you have this bullish pressure that was moving up, including a 21 EMA here. This is not a place you want to be taking this trade. You don't want to try shorting that. But this is one of those nuances you have to figure out and learn about so that you avoid taking trades like that and losing. So prices are continuing a little bit. Strong push down, new high, first entry long, second entry long. We also have a new low, first entry short, second entry short if there's a trigger below this bar as prices continue to print. Now, this is one of those opportunities. I'm looking at this failure strategy and I'm thinking this could work here. Look at what prices are doing. They're pushing above the EMA and holding. EMA is being respected by the prices. Some people may take a second entry long here, right? You have a new high, first entry long, second entry long, and it potentially works. You treat this as a higher low opportunity. You can go long there. But I've really liked trading the traps a little bit better. So what happens? People try shorting below this bar. Prices come down to the EMA and hold. Where are their stops going to be? One tick above this signal bar. This is another trade I took for the day. You enter one tick above the signal bar. Next bar prints. You're in this trade and out for a scalp. Depending on where your stop is, your runner might unfortunately get knocked out, but you get that scalp as prices continue upwards. Now let's talk a little bit about what's going on here. So prices are continuing to move up, but then you have this strong push below EMA. So when we're thinking about the failure strategy, we could potentially be looking for reasons to go short, but we need to see how prices are going to play out. We have this new high up here, first entry long, second entry long triggers above this bearish bar. So people are long in this trade. Where are they putting their stops? Very similar to what was going on. Where did we say? I can't remember exactly where we were talking about, but we have to ask ourselves, where's the stop going to go? Is it going to go one tick below this signal bar, or is it going to go one tick below the swing? That's the question we need to ask, is where are people putting their stops? So again, something I'm still trying to figure out. I think we were talking about it right over here in this area. So second entry long triggers are you going to enter below the signal bar specifically, or are you going to enter below the swing? I think it was there, but I can't remember. Regardless, we're in the same dilemma here. Are we going to enter one tick below this signal bar here or one tick below the swing? As we see prices play out, for those that decide to enter a little bit higher here, you'd be in this trade and out for a scalp. If you try entering one tick below the swing here, you're going to be in and potentially out for a scalp. Let's see, if you enter at 1.0, prices go down to 8.5, so that's 10 ticks. You'd be out for 2 points if you tried entering there. I don't want to forget to draw it, but we do have a short-term trend that is working down with the break looking for a new low, and that's exactly what we get. And just to try and be somewhat consistent here, we had this channel working up, maybe a little bit harder to draw, but regardless, we have a break, short-term trend break, move to a new low, potentially entering the failure strategy below the swing here as prices are continuing down. So this downtrend has played out. This is another one of those opportunities I really want to talk about. We have a new low here, first entry short, second entry short if there's a trigger below this bar. And as prices print, we don't get that. Looking for a second entry short. There's a second entry short. People are in this trade. Don't try trading long here. Don't try trading the failure here. People are in for the second entry short, but you're fighting against two things. One is the EMA. EMA could continue to hold prices, and two, prices are pushing below the EMA and holding. So don't try entering a failure one tick above this because prices could come up and then reverse, continue to push down and stop you out. Now, it just so happens as bars print, you'd be in this trade if you entered one tick above and prices continue up. So you would have gotten the scalp. But this is one of those things where it worked this time, but it's not going to work every time. The inverse of what we were talking about happened right here. Don't try entering short one tick below this signal bar because you're fighting against prices and the EMA. Just follow price action. You have to just sit on your hands and wait. Prices consolidate for a little bit, push up, failed breakout, coming back, and potentially to test, right? You had the break of this short-term channel working up. So that could be another test of that. And when prices fail to meet that new extreme, they push strongly below EMA. So now we're pushing strongly down. So we have this short-term trend that's working down pretty steeply. Break looking for a new low. Now the question is, are we looking to trade any failures here? I want to say no, because you have two different things going on. You have the short-term trend that's working down with a break, potentially looking for a new low, but we also have this 200 EMA that's working up. Prices tried pushing below this 200 EMA and they could fail. The prices could fail. Support may hold and prices will push up. So as prices continue on here, yes, you have room to the EMA. If there was a second entry short that triggered somewhere here, you could trap people and take it long, but price action rules still matter. We have the short-term trend working out. Down, break, looking for a new low. We're not getting that. As prices come up, new low, first entry short, second entry short if there's a trigger below this doji bar. Not interested in taking something like that. For those that enter, you'd be out for a scalp. But yeah, this was kind of a tricky place to trade, so just stay out of stuff like that. So I was close to wrapping up for the day. I saw this potential opportunity. We had prices push strongly below the EMA, new high, first entry long, second entry long. I had an order prepared to go short here because prices could continue down. As prices came down, the 200 EMA was not respected. So as the 200 EMA curves, we could be looking to push back down. So I just had an order here prepared to take a short, but prices continued up and I just canceled the trade. There was nothing to trade there. As prices kind of chop along here, we have a new high, first entry long, second entry long. We also have a new low, first entry short, second entry short. This is actually a great place. If I'd stayed in a little bit longer, this would have been a nice second entry long to take. I like it because the second entry short had triggered below this bar. So you have this new low, first entry short, second entry short. People are in this trade, and as prices reverse up, you have a new high, first entry long, second entry long. I like that, and it works out. So that's a second entry long that I would have liked taking. Now I'm not drawing it, but you do have some sort of trading range here. As EMA is flattening out and prices are oscillating up and down, you have a breakout pullback to the resistance level of this. That looks like a nice trade to take. New low, first entry short, second entry short. If there's a trigger below this bar, this is another opportunity I look at going long. One tick above this signal bar here to catch the stop. So people are trying to go, they're going to try going short. Okay, so this next bar prints. People are short in this trade and then reverse. You enter one tick above the signal bar here, catch the failure, ride the stops. Ride that momentum a little bit for the scalp. You enter 925, you're out at 1.75. Yeah, that's 10 ticks right there, so you would have been out of that trade. But anyway, yeah, that's really all I'm going to cover for today. Prices continue to push down another strongly below EMA. You can see, even post analysis, you can see where the strategy works. Like prices are pushing down here. You have this new high, first entry long, second entry long. People are trying to go long, trying to pick a bottom. It doesn't make sense to me. Prices are pushing strongly below EMA. They're cutting through 200 EMA. Prices are going to continue down. So what do? Just help them out of their trades. Enter one tick below the signal bar here. One tick below. You're in at 8.75. Catch a scalp, and then you're in a runner because prices never come back to stop that runner out. So this right here, would be a phenomenal trade to take. Don't sleep on this strategy. There's something here. And we just have to kind of figure out the rules a little bit more and know when to trade it and when not to trade it. But I love it. It's been working out really well. So if you guys enjoyed today's video, please leave a like, subscribe, turn on post notifications so you know exactly when I post these videos. Comment. Let me know exactly how the strategy is helping you. What kind of rules are you implementing for yourself to keep yourself out of bad trades? Remember, the whole point of all this is to be profitable. We want to be consistently profitable in what we do as traders. So don't hesitate to try something new. If things aren't working the way you want them to, try something new. There's more than one way to make money in the market here. So feel free to share this video with a trading buddy. It doesn't hurt having that additional resource. And as always, thanks for watching. I will see you tomorrow.